Hello, welcome back. A viewer of the channel asked a very intriguing question, and I thought this one deserves its own video. We're going to talk about whether it's actually wise or not to invest in cryptocurrency and whether it's a good idea to do so. And in order to understand whether that's the case or not, we need to fully understand what an investment is and what it's supposed to do for us. And so we're gonna talk a little bit about crypto, the stock market, different types of assets and liabilities here. So if you're new around, you may want to subscribe because we're making all sorts of investing type videos pretty much daily, and I'm pretty sure you will learn and enjoy if you stick around, so you may want to subscribe. And please like the video as well, because that really helps grow the channel, bring the content to more people, and helps me make more videos for you guys. So thank you. Now, let's talk a little bit about investing. So what about a car? Is a car an investment? So a car is actually an asset, so you actually spend your money to buy a car, and so that is an asset for you. However, in the long run, a car is more than likely a liability. A liability is something that actually costs money to you as years progress. And so if you buy a car today for $10,000, let's just say, in 2 years from now, it will more than likely be worth like $6,000. So it's losing value. It's a depreciating asset. It's a liability. So you buy something today and it loses money, not a good idea, right? What about a house? Is a house an asset? Is it a liability? Is it an investment? So a house could be all sorts of things depending on how you utilize it. So a house is an asset because you spend your money and you convert it to an asset that you own. Now, if you actually rent an apartment to somebody, then you are making some money, and so this is an asset that provides some money to you. So it is an investment in the sense that you spend money and you are gaining money back. And also, if it's appreciating in value, 10 years from now it may be worth more. And so this means that it is an appreciating asset, so it is making money for you. And now, of course, there are all sorts of different types of assets like bonds, stocks, all sorts of things really. Again, real estate is another type of asset. And so when we're talking about these different types of assets, anything could be an asset as long as people want to buy it. And so back in the day, like many years ago, you may have heard about the tulip mania. Let's talk a little bit about that. The tulip mania, I have the Wikipedia here, happened back in Dutch, during the Dutch Golden Age, where contact prices for some bulbs of tulips really, of some fashionable tulips reached extraordinarily high levels. And so what was happening back then, at some point it was the biggest asset bubble, actually the earliest asset bubble in history, where actually people were very fascinated by tulips, and tulips became a thing of status really. And so people who owned tulips were considered elite people sort of. And the tulips were selling more and more, and so people were willing to buy more and more of those things. And so traders came in and they were buying more of those in order to sell them to other people because they were making tons of money, right? And so there was this thing which was a tulip mania, and people kept buying, and so the prices of tulips went higher because more demand increases the prices, right? Now the thing is, at some point, tulips didn't really have any value. Like people were spending extraordinary amounts of money, and they were getting flowers. And so these flowers were actually supposedly assets, but they were not yielding any income back to their holders. And so at some point where this weird interest in tulips was lost, tulips went through a bubble, and they basically burst, and the bubble burst and they went down to oblivion. The price went down to oblivion. And so this was like one of the first bubbles that formed like many decades ago, previous centuries ago. And you can see here how an asset actually caused this kind of tulip fever that made people buy some asset supposedly for no real reason. Because when you buy a tulip, what can you make out of it? Like, you can just put it in a vase and it's a status symbol. Okay, that's good and all, but there is a problem. I mean, you can make millions of tulips. You can actually plant them, and it's not like you are getting a single tulip that it's tough to find After a while, you can basically reproduce those. Is a fungible asset, as we call it. Is an asset that you can very, very easily reproduce, and there is a little difference between tulips. Now, if we're talking about a single car that was owned by a prince, for example, then this has value because again, it's a non-fungible asset. It's an asset that you cannot really reproduce. And this is why you are hearing about the non-fungible tokens, potentially being tokens that cannot be reproduced, that have some value. Now, are those an interesting type of investment? It's probably a topic for a different video, but you get the idea. The fact that something is non-reproducible and it has some value because of status, because of people, there's like a celebrity behind it or something of that sort, and people want it, then it gains value. So now let's jump to cryptocurrency. Cryptocurrency came into our lives with the idea of potentially being something that we will be utilizing in our daily lives. So the idea would be that we can actually use these coins as a means of purchasing things. And the fact that they are decentralized and there is practically nobody that is in the center of the coins. It's just a blockchain where basically all the transactions are recorded and they are public to everybody, and they are governed by the pretty much public key crypto. Is how this whole system works, public key cryptography. And the idea is, the whole interest behind this thing is the fact that nobody can actually control it. And there are a few problems with that. The first problem is that if nobody can control the transactions, and that's actually true, nobody can really control the transactions because of the crypto that's behind it. It's very, very strong, and it's almost impossible to alter and read what's happening and actually change what's happening, like change transactions. It's almost impossible. And if that change even happens, the whole blockchain will be rendered useless, so people will know about it. So the big problem with this idea, though, is that governments, do want exclusivity. So they want to be handling currencies. And so if some sort of currency becomes the main thing and people start buying all sorts of things with this currency, then governments lose control. And what do you think governments will be doing if that happens? Will they just stay there and look at people? No, they will eventually have to do some sort of banning to crypto. So this could be a very, very important concern for the future if at any point cryptocurrency actually becomes a thing for people to, to actually buy stuff with. Now there is another big problem with crypto. Crypto, first of all, is not, it's not easy to use for my mother, for example. Like how is my mother going to be using Bitcoin to buy stuff? There's a big problem there. There has to be some sort of a digital wallet and things of that sort. Now this can happen, but there's a bigger problem with that. Cryptocurrencies are very, very volatile in their movement. So they tend to go up and down massively during the day even. And so you can have a cryptocurrency that's trading at, let's say, $700 today, and next week it's trading at $900. So how do you think that works within an economy? It's terrible. Within an economy, you need a very, very steady coin. You need something that doesn't really move. Or if it moves marginally every month or so, not even every day. And so this is what happens with the dollar, for example, or the euro, or any other sort of currency, for the most part, that's being used by nations. And so have you heard about cases where, there's like high inflation and there is all sorts of trouble within economies? That's exactly what would be happening if economies were to adopt a coin, a crypto coin. There will be all sorts of issues around the coin inflating and deflating every day. So how can you transact with that? Okay, so this is almost impossible, at least at the current state of these coins. So what happens next? Regardless of that, are these crypto coins still an interesting type of investment, regardless of their use in the actual economy? So the thing is, if something is not really used in the actual economy, what is its actual price? What is its actual value? I don't know. The thing that happens is the actual value becomes the value that people are actually willing to pay for it. It's the value that people were willing to pay for the tulips. It's the same idea. And so whether Bitcoin is sitting at $400,000 or $1,000 or zero, what affects that thing? Is there something that affects it? Not really. It's all about people and wanting to buy Bitcoin. So if actually people started selling Bitcoin, it would just go down. But this happens with every asset. So you could ask the same question about a company, let's just say Facebook. So what about Facebook? Isn't that the same thing? Facebook will go down if its price goes down, right? And I mean, Facebook stock is how much people are willing to buy it for, right? Well, not really, because there is a big difference here. Let's take a little bit of a look at Facebook here. So I do have Facebook here, and yes, the price of the stock is about how much people are willing to pay for it. But there is a very important distinction here. Facebook is actually making money, and where you are actually a shareholder, you own a percentage of that company, of this company, Facebook. It's a public company. This is the whole idea. And so if you take a look at the cash flow of the company, let's go at the cash flow statement of the company, and just take it back to the last 5 years or so, you will see that the company is making 39 billion dollars in free cash flow. And free cash flow is basically the operating cash flow of the company minus the capital expenditures of the company. So it's basically how much they are making after their operations are funded. So the company is making $39 billion here. Now, how many stocks, how many shares does this company have? So this company has 2.72 billion shares. Now, if we go back to our cash flow statement here, and it's actually interesting to see, you go down over here, you will see that the free cash flow per share, which is this figure divided by the amount of shares that are outstanding, 2.72 billion, we're going to be getting $13.88 per share that we own. And so we are actually making money here. We're making assets on top of our holdings. Now the thing is, the same thing doesn't apply for crypto. With crypto, we're not making anything. We're just waiting for somebody else to buy our crypto. And so if that never happens, we will never be making money. Now the thing is, with Facebook, if people are willing to sell, and if they do keep on selling Facebook, at some point this price is gonna be lower, of course, if people keep selling. And you are still making the same amount here. This doesn't change because the company still makes the same free cash flow. And so now you are making, let's say, $14 and the company's stock price is $100. And so this means that every year you are making 1/8 of the value of the stock in free cash flow that the company generates. And so you can understand that your investment is effectively paying for itself, is paying you back. And what you need to realize is that money loves money. And so people seeing this opportunity of a company that's actually making 10 times its free cash flow when you actually compare it to its price, they will eventually flock in and start buying the company because they are making money. The problem is the same thing doesn't apply to cryptocurrencies. That's the big problem. And so you are looking at Facebook here having a market cap of $500 billion, $574 billion over here. And let's go back and take a look at the cryptocurrencies of today. And you will see here, for example, that Bitcoin is actually worth more than Facebook, yet it's not making any money. Ethereum is actually a little bit less than Facebook, but close. It's not making any money. None of these is making any money. None of these are making any money. And the thing is, tomorrow, Tether, for instance, could be worth 120 billion of market cap. Market cap, by the way, is the price of the coin multiplied by how many coins are circulating. This one, and so this is how you get the market cap. And so you can understand that it's very important with your investment. If you are a cautious investor and you are not just spending money for no reason, you need to be owning investments that are actually yielding back some interest to you, yielding back some money to you, some profit. And the way to do that is by owning assets that are generating income. And a stock, it might not look like it's generating income, but it is. It is generating free cash flow. The company is generating net income. As long as you buy a company that does those things. And this is what my channel is about, actually discovering these types of companies and not just buying the fancy companies that are like the cryptocurrencies of the stock market, pretty much. And so, should you actually own any cryptocurrencies? Now, that's a little bit of a different story. I myself actually own a little bit, just a little bit, not much. But there is a very, very important distinction here. I own some of these things, but I understand that they are sort of like a lottery ticket. They are not an investment. This is the very important thing. You can own these things as like participating in the tulip mania, waiting to capitalize it. Okay. But if you actually own these things and you expect them to be an investment for the future, I don't know. I mean, that's a little bit weird because for now, at least for now, they are not generating anything in terms of profit or income back to you. So you're speculating. So basically, you're buying a lottery ticket, and that's the whole thing. If you understand that and if you're fine with that, go ahead, buy a little bit. But I wouldn't recommend that you overdo it, because you're spending money on something that could end up being thin air. Who knows? It may end up being the next thing, but again, you don't have anything tangible about that. That's the important thing. And so, whether you talk about Dogecoin or any other sort of coins that have been the thing of the past, remember where the Dogecoin was back in like 6 months ago or even less. Look at that. Like, this is insane. So these types of instruments can actually go up at that same price again at some point. Will that ever happen? Who knows? Maybe. But if that happens, was there a reason for that? The only reason for that was that people suddenly started buying. So somebody tweeted about it, maybe Elon Musk, and then people all of a sudden started buying again. That's it. There's nothing else behind it. But Facebook, if Facebook goes down and people start buying, then they are actually owning a piece of an asset that's generating money back to them, and that is the very, very key difference about investing. So hopefully this video actually helps you a little bit understand whether it's wise to invest in cryptocurrency or not. And again, I don't have any objections with the cryptocurrencies, but you really need to realize that there is no investing in cryptocurrency. It's just getting into a potential lottery ticket that could yield some money in the future for you. That's it right now, because again, you don't have anything tangible about any of the cryptocurrencies at the moment, at least, and they could all go very, very bad at some point. Who knows? Maybe governments get into those things and ban them. I mean, it's a possibility. It may not happen in the US, it may happen in other governments, and that could really, really affect it. So yeah, that's what I had to say, and that's what I wanted to talk about. A very, very interesting topic, this one. Let me know what you think about crypto, generally speaking, potentially even investing. And thank you for being around and watching the video till the end. It was a little bit of a lengthy video, but I think it was worth it. And please like it, because that took a little while to make. and again, hope you enjoyed it, and I'll see you in the next one. Bye bye.